Hey team, welcome back. I'm Frank Cho, and I'm here to help improve your financial education. If you're new to the channel, make sure to hit that subscribe button below. So many times we see in our feeds, whether it's on Facebook or LinkedIn or whatever platform you're on, all these lists of things that we're doing wrong with our finances. So I want to react to something that I saw today that I actually thought there were some good points and see what maybe is good advice, what's not, and how we can take steps to improve our own personal finances. So this article is about millennials in particular, but it really applies to everybody. Let's jump right into it. So if you're like me, you see in your feed all the time these different articles about finance, probably because of what I'm following. But these pop up, and some of them are kind of gimmicky. They want you to sign up for a bunch of stuff based on the article, and this one that we're going to look at is kind of like that, but it does actually have some pretty good advice. So this one's called 8 Ways Millennials Accidentally Ruin Their Finances. Not just millennials, all people can fall into these traps. So I'm going to talk through their list of 8 things, tell you what I think is actually truly something that is worth pursuing, or if it's just kind of fluffy, and then my take on it. So number 1, not investing enough, especially when you can get $5 free. So their $5 free thing with the Stash app, don't worry about that. It's that not investing enough and not investing soon enough. So the best time to start investing was when you were 20. But if you didn't do that, and so many of us were not in the position to be able to do that, then the second best time is right now. So if you caught the Webull video that I did just a few days ago, that gave you an opportunity to get in and get 3 free stocks, which that promotion's still going on until the end of the month. So the link's down in the description. It's a great opportunity for you to just jump in and at least get going. So invest whatever you can, even if it's small. $50 a paycheck, $100 a paycheck now over the time until you retire can make a huge difference. So get started as soon as possible, get started early, and then make it a commitment. And don't try and game the market. Just pick index funds, low fee profile. A great one that I love is VOO. If you just look that up on Yahoo Finance or within your app, you'll be able to see details about it. It's just the Vanguard S&P 500 index fund, and it tracks those top 500 companies, and it has a really low expense ratio, so it's a good one. Next, they say overpaying for car insurance, and this one's really true, especially now. So many of us are, working from home part of the time, if not all the time, in lockdown, not driving as much, which means your premium really should come down. Geico is an example of one that lowered everybody's premiums across the board because of this. But if you're willing to give your company a call and say, hey, I'm thinking about switching, what can you do to help me? That simple phone call can save you some money. I recently just called Geico myself, even though they'd already lowered the rate. I gave them a buzz. I had gotten a quote from somewhere else, and they dropped our premiums by about $100 additional every 6 months. So it does make a difference, and you can, in a short phone call, make a big savings for yourselves there. So shop around. I've found that Geico, Nationwide, Esurance, those 3 tend to be the cheapest. I've used all 3 of them myself. I've quoted some of the others like State Farm, Allstate, but they always come in higher. There's some options out there too that'll comparison shop for you, whether that's Root or the one that they talk about in this article, Quote Wizard. But take a few minutes and do it. I mean, if a 20-minute phone call, 15-minute phone call can save you $100 every 6 months, or a couple $100 a year, it's definitely worth it. Okay, number 3, not getting life insurance while you're young. So this is one that I maybe don't agree with so much. When you're young and you don't have anybody that you need to protect, then life insurance isn't really that great of a choice or use of your funds. When you get married and you have kids, or if you're in a serious relationship, that's the time when you might want to start thinking about life insurance. The reason they say do it when you're young, if you can get into a good term policy when you're at a younger age, you can lock in that lower rate. And there's plenty of options out there There's a lot of ways to comparison shop. Ladder Life Insurance is one that's all online now. That's pretty good. I used Health IQ when I was doing mine at one of the Spartan races. They actually had a booth, and I went and talked to them. And based on having a above average level of fitness, they were able to give me a quote that was lower than what the typical premium might be. So those are things to look at to be able to save on it. But when you're looking at life insurance, remember, it's not for you, it's for the people that you need to protect. So if you don't have anyone yet, then don't really put too much time or focus into it. But when you have people to protect and assets for those people, that's when you really want to think about it. So if you have a home that has a mortgage, you want to be able to cover that in the event of your death, and at least a few years until your family can get back on their feet. And if you have the funds available, even more to be able to help them get through a longer period of time. So keep that in mind, and don't mess with the whole life. Just find a good solid term life policy that will help cover you, and get like a 20-year term or something like that. Once you're older, and if you have kids and they're grown, you don't need as big of a policy. So there's no point in continuing to invest a lot of money into a hefty policy. At that point, you can kind of trim it back down. Number 4, they say using a debit card. I can't stress how much I agree with this one. So debit cards are tricky because it's linked directly to your checking account. So if that card gets lost or stolen, the person who gets it has immediate access to your funds. It's very difficult to get it back. You have to go through a lot of hassle. On a credit card, though, you can immediately flag it as fraudulent and then dispute charges, and those will get rejected as fraud. And so you have a lot more protection. And on top of that, with credit cards, you have reward points that you can earn, and there's often reward offers when you start a new credit card. But be really careful with this. You don't want to use a credit card to just run up your bill there. A credit card is a tool, and you want to make sure you're using it appropriately. So I can talk forever on credit cards, and I probably will in another video, but really focus on optimizing the value that you get out of the credit card and pay it off each month. They have a link here to a sign-up offer, and I'll actually link the offer in the description here. So when you click on that, if you choose to, American Express is doing a pretty good sign-up deal right now. So when you see this, you'll see Frank has referred you for the Platinum card. The Platinum card is a great card that I do really like, and it has a great offer right now, but the fee is pretty high. It's not as easy to get as much value out of it right now since you can't travel. It's really a travel-heavy card. But if you go here, you can look at all personal cards with an offer. And when it loads up, you'll see the one here that I think is really great is the Blue Cash Preferred, which you'll see here. There's no annual fee for the first year, but you'll get a $300 cash back offer when you spend $3,000 in the first 6 months. And on top of that, you have a 0% APR for the first year. So it's kind of an all-around good card worth looking at. Or alternatively, another one I really like is the Amex Green Card, which has a 50,000 membership reward point offer right now, which is the highest I've ever seen it on the Green Card. It does have a higher fee, but the perks and benefits on it are a little bit stronger. So either one of those are great ones to consider if you do need a credit card. And really, I try and time new credit cards with big purchases in my life. So right now we're getting ready to move. And so we'll have to pay for movers, and then we're going to have to pay for landscaping. So as soon as we get settled into the house, I'll be looking at what card is going to offer the best value for us to be able to add and to do that landscaping. Probably is a big one. And I'll probably be looking at this one here, the Blue Cash Preferred. So again, the link's in the description. If you need one, these are great offers. And if you're into churning credit cards, which some people really are into that, for the benefits and the big sign-up bonuses, Amex has great offers right now that they've upped recently. So worth taking a look at. Next on the list is forgetting to negotiate. Even a cable bill is negotiable, and so this one's really important too. When you're looking at your bills, there's a lot of room to negotiate. So whether it's your cable bill, your internet bill, just a simple phone call like we talked about with car insurance, you can just jump on the phone and be like, hey, I'm looking at this other option. Right now it's kind of a tough time. What can you do to help? And a lot of times just something simple like that will help you cut it back. but in your day-to-day purchases, even asking for some kind of a discount, particularly on the big things. So you might not be forcing the issue on some of these smaller purchases, which I get totally, but when you're looking at like appliances, never pay the full ticket price on an appliance or a car, these big items that really are a substantial purchase. You can always find ways to negotiate. And one of the best books I've ever read in my life is called Never Split the Difference, and I'll link it below. All about negotiating. Chris Voss was a former FBI hostage negotiator and gives you great tips. And it's a really entertaining read, and even the audiobook's really great. So again, check that one out. It's a good one and will help you to be better at negotiating, which is really uncomfortable, I know. But once you can overcome that fear, you can really save yourself a lot of money. Number 6, paying high interest rates on credit card debt. So this is a trap that you can fall into, is if you've gotten credit cards and run up the balance, then it keeps churning at this really high interest rate, and it keeps building and snowballing on itself. So if you have 19%, 20%, 25% interest rate on a credit card, you just pay the minimum. It's going to take you years to get it paid off. So really, you want to focus on eliminating that debt. So again, this article is trying to push you into refinancing it. A lot of times you're better off just setting up a plan and just hammering it through. But if you do have high balances, some of these refinance options are pretty good, especially now with interest rates as low as they are. There are some good options out here. So Tally, it mentions here, Credible, they're good kind of platforms to match you up with a lender that can help you. And if you can cut your rate in half, it can help accelerate how fast you do your payback. So we'll talk in a future video more about how to eliminate debt, and I'll kind of go through a step-by-step process with you. Number 7, not having a healthy emergency fund. So an emergency fund is critical, especially right now in a time where there's a lot of uncertainty and we've got the potential for job losses or cuts in pay, or your business might even go under if you're self-employed, or if you work for a company, the company could go under and face a bankruptcy, especially as people have been, more tight with their money or unemployed or locked down. So making sure that you save is really critical, even if it's just a little bit. Now, keep in mind, an emergency fund and your savings is not the same as your investments. So this is your break the glass in case of emergency money. So whatever amount you determine you need to have in this fund is only for that. It's not to put into the stock market. It's not to do anything else, but to keep it in a safe location for you to be able to access it quickly. And when I mean safe, I don't mean underneath your mattress, but in a simple high-yield savings account online can be a great place to keep your emergency fund. There's a lot of great options out there. Marcus by Goldman Sachs, HSBC, CIT Bank, they all offer much higher than normal interest rates. When I say much higher, you're talking like 0.5 or 0.6%, but compared to your bank or credit union that might only be paying out, like 0.01 if you're lucky, then they're really worth considering. Typically, finance people say, oh, $1,000 is what you should have in your emergency fund, or some say 6 months, or some say 3 months, or whatever, but you need to determine what you feel comfortable with. I personally like having 3 to 4 months because that's a safe cushion, I feel, especially since my wife and I both work, that we can kind of extend that out even. You might not be comfortable with something that short, so you might want to target a 6-month emergency fund. So just keep that in mind. And when you're setting up the emergency fund, plan out what expenses you would have in an emergency, because your emergency expenses are not the same as your day-to-day expenses. So if you'd like to see a video on how to create an emergency fund, where to put it, and how to calculate what you really need in an emergency, leave a comment below and let me know. And that could be a great video for us to go through in the future. Next, it says, invest like the pros with zero commission trades. Finding a good brokerage is a lot easier now. There's so many of them out there. With the advent of Robinhood and their zero fee platform, you've seen some of the bigger companies start to eliminate fees. So Ameritrade, Fidelity, you name it, they're not charging fees anymore. So lots of good options out there. Again, like in the previous video, Webull's a great option. free, and they have that great sign-up offer right now that's linked in the description. So check them out if you're looking for a brokerage. But if you already have one, great. Just make sure that you're actually using it and making sure that you're not paying any of those fees on the trades, because at this point in 2020, there's no reason to pay fees or commissions on stock trades because there's so many fee-free options available. Next, not taking simple steps to improve your credit. So we've been through in the past year a couple of videos that I'll link below as well on how to improve your credit. Getting your credit report, understanding what's in there, that's crucial to improving your credit. Opting out of those pre-screened offers, like in the video we went through, that's a great way to get a quick boost. And you'll probably have seen it by now in the commercials on TV with John Cena about Experian Boost. That actually can get you a couple point boost just by signing up through Experian and leveraging that boost by adding your phone bill or your cable bill to it, because then if you self-report those, they can connect it and say, hey, this person's paying, this can help to increase your score. Next, they say get spotted up to $100 if your account balance runs low. So this is just a simple overdraft protection. They're talking about Chime, but most banks and credit unions have some kind of overdraft protection. So if you have it, you can just make sure that you have it turned on. You should be using your credit card, not your debit card anyways, just so you don't run the risk here. But you don't ever want to go over your limit on a credit card or anything like that. So one, take advantage of the mobile apps and everything that you have available to you to keep track of your balance and don't overspend. But two, if you do choose to go the route of using your debit card, instead, make sure that you actually have it linked to the overdraft protection so you don't incur any other fees. Finally, it says bonus, not comparing your finances with your peers. So yes, money can be a very taboo subject. You can talk to your friends and family about it, but I know that that's really uncomfortable. There is this company called Status Money where you can go in and they'll put in demographic information if you link your accounts and everything, and it'll show you how you're comparing to people your same age. But I don't really like it so much. I use it myself in that it looks at only the people who use that app. So the people who use the app skew to be more tech savvy or into finance, and so it's going to artificially compare you to people that are probably above the average, and that will maybe create some kind of psychological effect like, oh, I'm behind. Don't feel that way. You really, yes, you can compare yourself against your peers, and there's plenty of articles out there where it says where you could or should be at a certain age, but don't compare too much on your peers. Compare on you. How are you improving and making it towards your goal? That's the important thing. We want you to be able to find fulfillment in your finances, to overcome your own challenges, and to live a full and wealthy and healthy life. Hopefully, this information was helpful to you. This article I thought did have some good points, but again, so many of these are just trying to push you into affiliate links. This is kind of my unvarnished opinion of what they had to say and my take on these points as well. Thanks for watching. Make sure to hit that like button below. And if you have any other questions that I can answer, leave a comment. Let me know what you want to hear about, and I'll be sure to include it in one of our future videos. I'll see you next time.